Today we'll be talking about refinance. I've got a couple of my clients call me this week and ask me if it's a good thing for them to refinance. So why should you refinance? When should you refinance? And how should you refinance? The first thing about refinancing is for you to know about your options. I would advise you, if you're considering to do a refinance, the first thing to do is do some research so you have enough questions in your hands. So when you call your loan officer, you are asking those questions. So you can make sure your loan officer is not just trying to fast track you to do a refinance, but that they are there as a resource to help you through the process. You can go to Wikipedia, read about refinance. That's where I found out that you can find valuable information about refinance. Do your research. Different people refinance for different reasons. Number one, you may want to reduce your monthly payments. I bought my house 5 years ago, 10 years ago. I've paid X amount in equity. When I bought my house, my interest rate was at 5%, was at 4.7%. But right now, I am thinking if I refinance, it will give me an opportunity for me to reduce my monthly payments. True, that can happen. Maybe you have a 15-year mortgage and you want to extend that mortgage to 30 years. So you have a 15 years and you want to extend it to 30 years. That's possible. The only caveat here is that you may have to extend the life of your loan, and in the long run you end up paying more interest. But yes, you can reduce your monthly payment, and one of the ways to do that is for you to extend the life of the loan. Number two, you may want to tap into your equity. I bought my house 5-10 years ago. I've had so much equity in this house, and at this time I'm thinking maybe I should do a refinance, take out some money, maybe to remodel my house, or take out some money and do some little business on it. So if that's your objective of refinancing, then you should be able to look at your mortgage and see how much principal you actually have inside your mortgage. So that will depend on your amount of equity in your mortgage. Another objective you may want to refinance is for you to pay off your loan faster. So if you have a 30-year loan and you want to refinance to a 15 years, you can do that. The only caveat here is that your monthly payments will actually increase, but yes, you will get to pay off your loan much faster. Some people refinance due to that their economic conditions may have changed. They may have gotten a better job now. Another objective for you refinancing may be to get rid of your FHA mortgage insurance. When you buy a home using FHA, the private mortgage insurance stays with the loan. It never disappears. When you buy using a conventional loan, once you pay down 20% of your principal, you can call your mortgage servicer and ask them to drop the private mortgage insurance. So if you have an FHA loan and you want to get rid of the private mortgage insurance, then a refinance may be a good option for you to do that. Two things how you can get rid of the private mortgage insurance. You either refinance or you sell your house. Falling interest rates is one of the things that attract people to refinancing. About a month, I did a video where I talked about the state of the Texas real estate. and what to expect in the coming months. I talked about the fact that the interest rates are good and they will keep getting lower and lower. And why did I say that? If you remember back in 2008 during the recession, the only way the Federal Reserve got us out of the recession was to lower the interest rates. A lot of people were able to get houses, and that was able to stimulate the economy. We find ourselves now in this pandemic, coronavirus pandemic situation, and there has been the forbearance program to try to help people to not lose their homes to foreclosures. And even recently, on June 29th, there was the Federal Housing Emergency Relief Act that was proposed by Congresswoman Maxine Waters, passed through the House of Representatives. Our lawmakers, they understand that saving the housing industry is one of the most important factors saving the economy. If you look today at the interest rates for our 30 years mortgage, I'm talking about refinance rates, we're talking about 3.081%. For 20 years, we are looking at about 2.875%. For 15 years, we are looking at about 2.537%. So yes, falling interest rates is a good indicator for you to refinance. But remember, waiting for the interest rates to fall even further may be risky, because it's like you trying to figure out the stock market. Today it can be so low and tomorrow it could pick up back so high. Falling interest rates is a good indicator, and make sure you look at what rates you have right now, you look at these rates here, and you make a decision if it's a good time for you to refinance or not. How do you go about the refinance process? This is what I would recommend as best practice. So you first of all shop for at least 3 lenders. You ask the lenders to send you a loan estimate. The loan estimate is a 3-page document that will contain the loan terms. It will have projected payments. You have estimated closing costs, and you have other fees. Once you get your loan estimates from your potential lenders, you will now plug the numbers on the loan estimate into a refinance mortgage calculator. The refinance mortgage calculator will give you in detail the dollar worth of your refinance, so you'll be able to compare which lender is actually working out for your interest or not. Online, go to Google mortgage calculator. There are plenty of them, and you can use them and plug those numbers that you have from your potential lenders and see which lender is actually working for your interest. And at that point, you will determine which lender is best for you. The most important consideration, whether you should refinance or not, is the cost. A refinance will cost you about anywhere from 1 to 2% of the loan amount. So if I were you, I will ask for an amortization schedule from my loan officer. An amortization loan schedule will actually break down the amounts that you pay for that loan from day one to the last day of that loan. With an amortization schedule, you will be able to determine What is your break-even point? Say, for example, it costs you $10,000 in fees to refinance your home. At what point will you be able to cross that $10,000 margin? When you look at your amortization schedule, it will tell you that maybe in year 8, year 9, or year 5, you'll be able to cross 10,000 margin, and that will be your break-even point. So the question is, do you plan to stay in your house for that long? Because if I only plan to stay in my house for 2, 3 years, or 4 years, or 5 years, then refinance may not be a good option for me. Because by the time you get to the break-even point, you're losing some money. Maybe a good idea will be for you to use that $10,000 you were supposed to use to pay for the cost of refinance and pay that towards your principal. That will give you a much better effect than the refinance. So another thing to consider about refinance is how long you have to stay at your house. The break-even point is the most important consideration, but people often do not take this into consideration because they do not ask the right questions to your loan officer. Ask the right questions to your loan officer. Please, can I have an amortization schedule for my refinance? What year will you think will be my break-even point? Sometimes the best thing about a refinance is not to do it. But you must be able to have the right tools with you as you go along it. So please, is it a good time to refinance? Whenever mortgage interests are low, it's always a good time to refinance. But low interest rate is not just the most important factor. Cost to me is an important factor. And make sure you do your homework. Refinance is always good for whatever reason. Lowering your mortgage, take out home equity line of credit, reduce your monthly payment, but you must be wise to make sure that it is not counterproductive by doing your homework. So thank you. If you've already subscribed to our channel, we appreciate you. C2C Mentors is a real estate mentorship community, and here all we do, we talk personal finances, we talk family well-being, and we talk about issues that are related in helping you, especially at this time of the coronavirus pandemic. Thank you. Make sure you subscribe and hit the like button because that helps us with our readings. And see you on our next video. Thank you.